Good morning. At first I would like to welcome you to our press conference, the study of Mirjam van der Stichele. I just trained a little bit to pronounce the name correct. She will introduce us in the study after I finish my speech. At my right side, but he isn't a right one, he is a green one.
Thank you.
Is Philippe Lambert. Philippe Lambert is a colleague, or we are colleagues in the Econ, in the Committee on Economy and Monetary Affairs. And there's a connection between the study and the Econ issues.
Oh, yes.
And Gianfranco, I think you know. Okay. The controversial FTA between the EU and Colombia and Peru is criticized by NGOs and trade unions, indigenous and peasant organizations. They have raised their concerns about human rights, workers' rights, sustainable development, and the effects that the market liberalization will have with two very asymmetric economies. On one hand, the big EU, on the other hand, two small Latin American countries. But today I would like to share with you other concerns that are less frequently mentioned and that could not only impact the Andean's economies but also the EU economy. The FTA was negotiated before the crisis erupted, during times when financial market deregulation was presented as more common sense. 4 years later, it seems the diagnosis quite changed and financial regulation is finally not the bed of an idea. Philip will explain it a little bit more. During the last 3 years, we tried in the Econ Committee to implement a re-regulation as good as possible, and the position changed. Unfortunately for Colombia, Peru, and as we will see, the EU, the clauses comprised in the FTA dealing with capital floor have been written without taking into consideration the lessons of the crisis the EU is currently going through. Moreover, the FTA is written as though the author were oblivious to the fact that Peru and Colombia were the two main cocaine producers in the world, and as a report says, the FTA between the EU, Colombia and Peru has no particular articles or annexes to oblige the signatory countries to have measures in place to tackle money laundering and the financing of criminal activities. How does removing capital flow controls and liberalizing financial markets sound now in this context? Shouldn't this be instead another reason to reinforce regulations, another reason to make cooperation mandatory in order to fight against illicit financial flows or any other measures suppressing crime-related money flows? 15 years after the beginning of the NAFTA, the North American Free Trade Agreement between USA, Canada and Mexico, and after the implementation of the deregulation of financial flows, illicit money flow in Mexico has soared up to $50 billion a year, according to the Global Financial Integrity. And of course, a major part of this illicit crime-related money is flowing through the very same country that consumes most of the drugs, the USA. What is to protect the EU economy from a similar flow of money? As member of the Economic and Monetary Affairs, with my colleague Philippe Lambert, our committee, the Parliament and the EU institutions are working very hard in the revision of financial instruments to reduce the risk of illicit capital flow and financial speculation. But that, what is negotiated in the FTA between EU and Colombia and Peru is ignoring all this. And what we want to do with this study is to draw the attention of the members of the parliament, but of the public sector as well, to this very special problem that we have on one hand a lot of activities in the parliament to re-regulate the financial sector, and on the other hand we are working on a FTA on a free trade agreement, which is such opening the doors whilst we close just some windows on the other side. I think that's not acceptable, and that's the reason why I ask Miriam to work on this issue and to prepare and table this report, which we call Free Trade Agreement EU-Colombia and Peru, Deregulation, Illicit Financial Flows and Money Laundering. And now I would like to give the floor to Miriam to introduce us into that, what you found out.
Yes, thank you very much. I think you gave a good overview of the problems. I will try to pinpoint some of them. I think if you look at the agreement, and I've been looking at quite some agreements that the EU has been negotiating, certainly this agreement, first of all, if you look at it, you don't see indeed nothing that kind of really makes sure that the trade that is being agreed and the liberalisation of trade that is being agreed, certainly in financial services, that it takes account of the fact that there's a lot of money laundering, a lot of illicit flows, but also don't forget, in Europe, there's a lot of tax evasion and tax avoidance happening. I'm coming from the Netherlands, and where it's the biggest country where money from tax evasion is going through. It's 5,500 billion a year going in and actually also going out. So those two, as you know, money laundering, illicit flows and tax evasion very often go together. So mixing the two makes it quite a danger. And in fact, what is amazing is that in this agreement, anything that is being mentioned about fighting money laundering and certainly what is regarding tax evasion is less than, for instance, what is being put in the EU agreement with Central America, sorry. So it's even not as progressive as it has been in other agreements by the European Union, which is, I think, quite shocking. So I think the one part, by trying to look, as I was asked by Jörgen, is to look at what is it that is being mentioned in this agreement about capital controls, but also about liberalisation of financial services. And actually those two often go together. Because if you liberalize financial services and also capital flows, you can imagine, foreign banks coming in your country, and they are able to transfer quite a lot of money. But what is also important is that for instance, trust services, that's the services, where tax dodgers go to get advice and so on, and the advisory services are also being liberalized. I think what is important with the capital controls is that they are being lifted. And the IMF just came out with a report saying, yes, we were wrong for the last 15, 20 years. The experience in Europe, and the literacy say, the experience in Europe shows that free flow of capital is in certain circumstances absolutely too dangerous. And what you need to do is to sequence it, to time it, to plan it. And that's exactly what the FTA doesn't do. It has some restrictions that you can allow on capital controls, but with a lot of conditions, only if this and that, and actually when it's already too late, which I think is a big problem. And also on I think on the tax evasion and tax avoidance, there's very little, whereby it's only each of the countries who can do something, but nothing together, while of course that's what is basically very much needed. Looking at the other measures that Europe has on money laundering, on the tax haven directive and so on, the progress there is extremely slow. So there's nothing for the moment there you can say, okay, fine, if the free trade agreement is not doing anything, but there are not other mechanisms which are really effective to deal with the illicit money. That's one aspect. The second aspect, as you were saying, is a problem that it is undermining regulation. The model that is being used is the model of the GATS, which was used before the financial crisis. And there's a split within the Commission, whereby DG Trade is thinking it's a financial industry which is giving us an export surplus, and they calculate it in that way, which means that's kind of giving us enough to ensure that we don't have an economic deficit of going to recession, that's what they're saying. But at the same time, they do it in a way whereby it's this light touch approach, of regulation, whereby you try and make sure that governments don't intervene. For instance, there's a regulation that says there's no way that the government can impose restrictions on the value or on the amount of transactions, and only in certain, if you have made exceptions before, etc., etc. But that's exactly what, you know, what we're trying to do in the MiFID. We're trying to say there should be limits on commodity derivatives. You know, we might want to be sure that the OTC derivatives are being traded as much as possible in a certain legal form, which is also a problem under this rule. So there's a lot of contradictions, and I've given examples in the report on what the European Union wants to do as a lesson learned from the crisis, but what actually is as a rule being forbidden, and only because of so-called carve-outs and prudential measures are allowed. But it's not clear what the prudential measures are. So the protection of saying, okay, this is a prudential measure, thus that means I can regulate as I want, is absolutely not guaranteed through this agreement. The Commission for the moment is saying it's fine, but if you really push them far enough, they're not sure either. And actually, with Canada, they are even undermining the prudential regulation. So if you have more questions, I can respond to that. So there's the contradictions in there, but also in this agreement, the EU is binding itself not to undertake certain regulations or to be extremely careful, which makes then it very difficult. Also, what it says, basically one of the rules is saying, if you didn't think that at the time that you're signing the agreement that some regulation will be taken, then you should not take it. But of course, the crisis shows that a lot of kind of regulations are necessary now that we didn't know beforehand. So that's where this report is binding Europe in a deregulatory way, while at the same time it's trying to regulate, which is unfortunately is problematic for Europe, but also for these countries who are still having their financial sector to be developed, etc. So I think I will leave it there.
I will not speak for very long. To me, it's really back to the future. That's really incredible. When you read the language of these agreements, you got the impression that indeed we are still in the 90s or early 2000s. And frankly speaking, I think that I'll be a bit blunter than what Miriam did. Karel de Gucht and his gang are clearly dead against the re-regulation agenda of the Commission. They know that this is an unpopular attitude, and so of course they are trying to use these kinds of agreements as conduits to actually try to block the agenda of re-regulation. That's really the way I see that. As Miriam said, look at MiFID, look at EMIR. These regulations and directives are really putting new limits to what can and cannot be done, and are to a certain extent re-regulating all financial services. And of course, the plan by DG Trade and the Gucht is to use these agreements to say, yes, but you know, we are bound by international agreements, failing to just indicate that we have been, the EU Commission has been negotiating these international agreements. So I see that as a power struggle between, say, the ultra-liberals that are still out there in the Commission and elsewhere in the European Union, and who try to block any initiative that would basically turn around the agenda of the early 2000s. There's a few other examples. Well, you know that I've been working on the venture capital dossier, where we have tried to limit indeed granting passports to venture capital funds operating in Europe to those who, to limit it to those who are not operating in tax havens. And there again, the definition of tax haven is something that up until now, the people like de Gucht and others in the Commission are trusting the OECD to define. And you know that by the OECD standards, there's no tax haven remaining on the planet, so we should be happy the fight is over. But now the good news is that DG TaxSud is coming with a has come with a communique. Well, actually, it's today's college that will issue the new communication of the Commission on or recommendation of the Commission, which basically gives a definition of what a tax haven is. But then again, this is fought off by a number of member states with the support of the Commission to avoid that this becomes binding. And of course, well, we could not do this until everyone agrees. That's a unanimity rule, and so on and so forth. So I see these trade agreements really as a vehicle of an ideological war that is going on within the Commission and within Europe, but a war that is better not documented in the open, because of course the positions that are defended by the ultra-liberals are positions that would have a hard time, I think, gathering popular support in Europe. The 80s and 90s are over. So, well, thanks for the study, Miriam. It's again good food for thought. I'd like to thank the Jürgen and the GUE and NGL group for commissioning the study. I must say that this is typically an area where I believe that our two groups can really collaborate very closely. So I'll stop at that because, well, most of the content has already been said, but I'm prepared to answer questions on how this contradicts the current agenda in Econ.
Merci beaucoup. Je pense qu'on peut ouvrir le question time avec les journalistes. Je vous en prie.
For the Belgian Newswire, for Mrs. van der Stichelen. I have several questions. First, on two issues that you haven't mentioned. I remember that some time ago when speaking about the agreement with Colombia, the main issue was trade union rights. So is that still an issue, and how is this handled in the agreement? And also a hot issue that you haven't mentioned now is protection of foreign investment. There's been last week a report of other NGOs saying that it's a big business and so on and so forth. Is that included in the accord? And then thirdly, on what you have mentioned, you have said that, or I read in the press release, that some other agreements with the other Latin American countries are more restrictive. What kind of restrictions are you talking about? What should be in there? Or do you simply consider that there shouldn't be any chapter on financial liberalization at all?
I think the purpose of the study and also of the press conference is indeed, it is extremely important. The issue of human rights is extremely important and is not being well addressed. And that's why, I mean, the issue is still there. But this is not the only danger that is in this agreement. It's also the financial issues and the problem of more illicit flows, of further liberalization, of binding both Colombia and Peru and the EU in a restrictive way on how to deal with the financial sector is also something that needs to have a lot of attention, certainly with these countries. So that was the purpose of this report, which doesn't mean that the other issues are not important. It's just to say, you know, that's not the only one. I think what is happening on foreign direct investment, because this agreement was already negotiated quite some time ago, this agreement does what it has happened in free trade agreements until 2011, let's say, because it is opening up foreign direct investment, because trade in financial services, trade in services is also including investment in services. So it's there, and it is opening all its different sectors, not only in services, but also in agricultural and industrial. So it's opening it up, which is, I mean, if from that perspective, you can also say there are conduits for illicit activity and so on. But what the NGOs were also paying attention to is that the EU is now trying to have a new mandate where it also wants to have the protection of investment, which is now in the bilateral investment treaties. It's not in here yet. Yeah, it's not in this agreement, but it does open up. I mean, like on financial services, there are very little limitations. What the agreement does is, to a certain extent, say, okay, it has to be actual economic activities being done, but the definitions are here and they're still vague. So in that sense, you can say it can still be kind of ways of being used for tax dodging and so on. So that's, you know, where the difference is between what is now happening in this agreement and what is happening, for instance, in the agreement with Canada, with India, and so on. So there's already, it's even going further. than what is in this agreement. What I think we meant with more restrictions is, for instance, that regarding how to deal with money laundering, with tax evasion and so on, the agreement with Central America is having actual provisions to saying, you know, we will cooperate together, we will share information, we will have trainings, we will act on what needs to be done, while all these kind of measures are not in the free trade agreement present, and not also somewhere else, which is amazing. In that sense, it's less progressive than what at least is being attempted. I'm not saying that it's very strong. It's very, very often best endeavor, but still it's there, and it's building up mechanisms to deal with the issue, which we don't see in the in this agreement, which I find extremely worrying.
I would like to add something. From my point of view, there is a link between money laundering and human rights and workers' rights, because money laundering and illicit money flow is closely connected to organized crimes. And they are not really known as organization. They respect human rights and workers' rights. And a lot of informal work is connected to the crime sector, and they undermine human rights every time and workers' rights, and therefore I think we have to take into account this connection.
Brian Maguire, European Business Express. It strikes me that we really are going back to the future, as Philippe mentioned, and the question really seems to be, how did it get to this stage? Who is the most influential lobby that has created this clear disparity between the Central America Agreement and the Colombia Agreement? So if perhaps each of you could just show in a quick way, who do you think has really driven this agenda, and have they been effective at it?
I think that the most powerful lobby is actually inside the Commission. It's not an external lobby. One should realize that if you look at the history of the Commission as an institution, one might say that from the creation of the European Union, well, of the European Community, up until the 80s, this was an organization dominated by the social market ideology or way of thought, basically coming from the Social Democrat and Christian Democrat side of the aisle. Now, when the ultra-liberal or neoliberal revolution came to be in the 80s, well, that was reflected in a gradual transformation of the organization, and you can see that by looking at those people who have been recruited. And you could really see a shift from, say, social market economy towards market deregulation agenda. And that was very, very visible in a few directorate generals. Well, trade is an obvious suspect, but market is another obvious one. And remember the times of Charlie McCreevy, which were basically exemplifying that transformation of the Commission. You can find that in DG TaxSud, well, basically in DG ECFIN, the economic pole of the European Commission. And I would just like to stress the fact that the highest civil servant of the European Commission is no one else than Catherine Day, who used to be, if I'm not mistaken, the chief executor of Charlie McCreevy. And I mean, these people are still there. They don't need to be lobbied. They absolutely don't need to be lobbied. And when you talk with commissioners who are back now with, say, re-regulation agenda, and Barnier is one of them, but Šemeta, surprisingly, is one of them as well, you can feel that bringing their own DG under control and basically steering it in the direction of re-regulation is not an easy thing to do, because there's resistance, because these people have been educated, have grown, have been promoted because they were pushing the deregulation agenda. So for them to renounce the agenda is an effort. You would need to lobby them hard for changing course. You don't need to lobby them for staying the course. And that's where we have a problem, of course, is that you can really see, if you work with Commission officials, that the deregulation agenda is very deeply ingrained in them. It's not something that you can uproot easily. Because these people are intelligent, they think by themselves, or so they think. And so if they believe that the deregulation agenda was right, it's very hard for a person, and even for a Green, I mean, I'm an ordinary person, to then recognize that what has been the core of your professional life was wrong, right? Now, it's already hard in DGs where the commissioner or the political, those who set the political agenda are pushing in a different direction. But now in DG Trade, when the commissioner himself is still very much on the deregulation, hands-off, light touch, that's even is too much, no-touch agenda, then of course they have a free rein. So again, do not try to see a lobby going around there. Now, of course, behind that ideology, there's a lot of financial interests, of course. And they've been around, and they are still around, and they will, I don't know, they may remain around. But of course, the financial industry is still combating re-regulation tooth and nail. I was yesterday in a meeting on the Liikanen report where this question of not splitting, but at least putting some barriers between retail banking and what they call investment banking, which I think has little to do with investment, has a lot to do with speculation. We could see the bankers saying, well, don't do that. This will kill the economy. Well, the usual bullshit that they are giving us. And then they were saying, it was really interesting, no, separation is not the right way to do it. Use rather more stringent capital and liquidity rules. And those same people are fighting against higher, tougher liquidity and capital rules where we are discussing them. So on front B, they say, no, we should rather pursue front A, and where we are in front A, they say, no way, we shouldn't do anything. So they are still pushing very hard against any form or shape of regulation. So they will keep pushing. They are not really heard or less heard today than they used to be with DG Markt, etc. But obviously with DG Trade, they still have a way to, through the back door, trying to prevent anything serious being made. But then again, I just want to stress that when the highest civil servant of the EU Commission, Catherine Day, is playing a political role, not a civil servant's role, and he's setting an agenda, and when people inside the Commission tell me that there are some words about re-regulation that Catherine will kill every time it comes to her desk, and everything comes to her desk, well then, again, you don't need a lobby. The lobby is inside.
More questions? S'il n'y a pas d'autres questions, je vous
Question to Mr. Klute. My name is Rafael Apache, a Flemish news site. How do you see the path forward now? Because if it's probably the agreement is probably going to be voted next week in plenary session and going to be adopted, how do you see this evolving? Is there any way to still block, amend? Thank
you. Sorry, it was very slow. I couldn't get the answer, your question. Sorry.
Now, how do you... Now? So, how do you see this process now evolving? The report is going to be adopted next week in plenary session, but it still needs to be ratified by national parliaments. What is your plan now, let's say? Thank you.
Yes, one part or one step of our plan is to communicate this study and to inform the political groups to be careful and to rethink their position. But I'm not very hopeful. But on the other hand, there are some criticism to the agreement. We discussed it during the last months very intensively. Yes, and then the other question is how the national parliaments and especially in Belgium, Paul-Émile Debré told me in Belgium you have seven parliaments, 5 or 7 parliaments. They have to agree, and our hope is that one of them will not agree, and that is a little bit our target to influence the Belgian regional parliaments. That's a small hope we have. But that's a question to you as well, Philip. Perhaps you see a possibility to do it in this way.
Well, I'll be very, very open. The Greens are part of 2 regional governments in Belgium, and we are actively combating this trade agreement. That's clear. Now, again, we need to convince our coalition partners. We are not the largest partner in these coalitions, as you may know. And the problem is, no one wants to look as the blocking factor, because the underlying assumption that trade is good, trade makes development, and if we are against free trade agreement, basically we are against development, and therefore we are hurting those countries. This runs deep, and again, it's part of all those unsaid assumptions. And so even for, say, socialists, it's a gesture to say, okay, well, the Walloon government or the Brussels government will just say no. And then potentially take fire from other parts of Belgium or Europe saying, well, you are blocking this whole thing, how dare you, etc. It takes a little political guts, but that's probably a scarce commodity nowadays, but we are trying to make it grow. Now, this parliament was bold enough to refuse ACTA the other day. I believe that this parliament has shown guts, and maybe it should show a bit more. And well, we can do it here as well. And I think it would be more powerful as a political signal rather than to say, well, this tiny region in Europe that is blocking the whole game. I think that it sends a much more powerful political signal. But then again, I'll refer to lobbying now from civil society. On ACTA, this was probably the most efficient civil society lobbying campaign that I saw in my mandate. I found it good, but I found it odd that it was on that topic. The second most active lobbying campaign is against this trade agreement with Israel. But on the rest of that, we are not lobbied very hard by civil society. And well, MiFID was a case in point when there was even this quite popular issue about speculation on food commodities. I had expected civil society to lobby hard. Not because I need to be, none of us need to be lobbied, in forbidding speculation on food commodities. But the problem are the large established parties in this house. And they are reacting to lobbying. When they know, because lobbying tells you one thing, is that someone is watching you. So it becomes harder for the traditional parties to speak the words of, human rights and sustainable development, etc., and then do something else when they vote. But when they know that someone is watching, then they become uncomfortable. And actually, that's what lobbying is all about, making the decision makers uncomfortable by taking decisions that are maybe not that easy to sell. And unless there is strong mobilization in society, and it takes a few tens of thousands Europeans sending emails around, because that's the way it works. MEPs I have yet to see an MEP saying, well, you know, it's only 10,000 emails that I got and there's 500 million inhabitants out there, so who cares? For them, getting 10,000 emails, having to clean your email every day of those emails, makes you feel like someone is watching. And if someone is watching, it's hard for me to say white in public and to do black when I'm voting. And that's a bit the missing link. And I hope that there will be increased pressure on us all, because that's the kind of pressure I like. So that maybe people in the EPP, in the socialists and in the liberal groups are thinking twice.
How come you didn't mention Germany? Because I guess the Green Party is also pretty strong in Germany.
Well, we are strong, but we are in the opposition, as you might realize. We're not part of the coalition, whereas you can only really play a role when you are...
No, but the second chamber, the Bundesrat.
Yeah, correct. Yeah, no, that's a good point. Good point. Well, I've not discussed the matter with my German friends, but I might think doing it.
But I think it's much more difficult in Germany to organize an opposition or a rejection of it, because the Bundestag, the German Bundestag, is very strongly controlled by the conservatives, and I don't have any hope that it's possible to change the majority in the German Bundestag. Therefore, we have to look to different solutions and ways. And one way is Belgium, but the other way, I agree with you, it should be done. The best would be to do it on the level of the European Parliament. And there is a chance. We have a committee on money laundering, and we will inform them about the study of Miriam, and perhaps they can intervene before the voting will happen. And we collected some NGOs are collecting signatures. As I know, they have some 1,000 signatures, 25,000 signatures concerning this food speculation, and MiFID. NGOs collected during the whole European Union around about 100,000 signatures. That was very helpful and very good. And I can only encourage the NGOs in Europe and in Latin America to collect more signatures and send more emails to the MEPs, yes.
I think it's important to know that indeed the campaigns have also very much been about the effect on human rights and so on, which is absolutely important. But sometimes it's important also to know that it is affecting every citizen, also in Europe. You know, this is a toxic mix. I mean, tax evasion and money laundering countries together. I mean, yeah. At the same time, as you were saying, it's helping to restrict financial reforms. Don't forget, for instance, that you know, because of these tax evasion, a lot of money is getting lost, and therefore we have austerity measures. So it's affecting really a lot of people, and this is not being taken into account. If this is not being kind of helped to be stopped through these agreements, it's going to affect all of the countries. Even now, the IMF is saying, you know, if Spain and Greece and so on were able to kind of have no capital flows, it would be better. And basically then the EU would have to reverse its laws, but it can't do it because international treaties go above these kind of, above the European law. So that's extremely important. So the message is there. It's not only an issue for there, and free trade is not something up there. It's something that is going to affect you certainly quite a lot. And also on financial services, don't forget, the more competition you have on financial services, the more there is pressure on the financial services sector, or to go in the shadow banking, or to take very risky strategies. I mean, the EU, the Commission ignores it, of course, but because of this free trade in financial services, there was a lot of pressure on the companies, for instance, the European banks, to compete like with the US banks, to make us a lot of profits, and they took a lot of risks consequently, we have seen the financial crisis is one of the problems. The other problem is that because of this competition pressure, there was a lot of pressure by the lobbyists to deregulate. If you regulate, it's costly. I mean, for years and years, we've heard regulation is costly. And they didn't want to do it because it was this international fierce competition against the American banks and so on. And therefore, I don't know if you've seen it, but in Holland, for instance, the services for the normal poor clients are just diminishing, because it's too costly. So it's affecting a lot of people and everybody, actually.